Hi Team Value, JJ here, welcome back. Well, is the bull market just getting started? Is the party just getting started? Today I'm first going to react to a clip with Dan Ives, one of the biggest bulls on Wall Street, an analyst, and he says this party's just getting started and it's going to go on for some time. We're going to look at what he says, see if he makes any sense, and I'll react to it, and then we'll look at some other things as well. So let's just get straight into it. What's Dan Ives saying?
Let's move on here and turn to our next guest. He predicts the NASDAQ will have another strong second half. Tech stocks will be up as much as 15% for that period of time.
Okay, so right off there, let's have a look and see what been happening. So this is the S&P 500 for that time. For year to date, it's already up 16.15% as I speak. And for the past year, it's up 23.64%. So Dan Ives thinks it's going to go on for another 15%. I've done videos reacting to Tom Lee recently. He's also very bullish. That's why they have him on these programs. These are perma bulls pretty much. Well, I'm not sure about Dan Ives, but he's definitely bullish right now. And Tom Lee thinks that it's going to be 20% compounding really to the end of the decade. And it's going to go on this year, the bull run, and Nvidia. They're both bullish on these big mega cap, US mega caps carrying on. Anyway, let's go back to Dan Ives.
For value, he says lean into software names such as Salesforce. Top picks include Microsoft and Apple. Yes, he's Dan Ives, Wedbush Securities Analyst, and he's right here at Post 9. I think you've outdone yourself today.
Look at that jacket and that shirt. He's definitely likes the colors, doesn't he?
We're going to have to get a full shot at some point.
He's looking tan too, midsummer. He's got a nice tan with playing against that lime green jacket.
Including the Japanese, the sneakers.
Yep.
Painted in Japan, I believe.
Yeah,
correct?
Japanese. Yeah, exactly. From an artist in Japan. So we could do the full shot.
Painting sneakers is a bit of a trend at the moment. I quite like it actually.
That in a minute. But let's talk about why you continue to see and be the bullish Dan Ives that you have been for quite some time.
Look, and it speaks to our view going into the year. NASDAQ 20,000 is ultimately where I think we head. Tech stocks up another 15% because even though this has been led by Godfather of AI, Jensen, Nvidia, the multiplier for every dollar spent on Nvidia chip, $8 to $10 flowing through the rest of tech. Software, infrastructure, semis, and I think now consumer AI revolution with what's happening in Apple.
Okay, so I think he thinks it's going to broaden out, from Nvidia, which he says the godfather of AI, that's said about different people, but I think it's going to broaden out into software and other companies. So Nvidia, and then it flows down. We've seen Apple come out with Apple Intelligence. We've seen Microsoft do well, but he thinks it's going to flow on. And software stocks have not been doing so well until recently. And we had that bear market in 2022. Some of those tech stocks got beaten down so much, 50, 60, 70, 80, 90% in some cases, depending on what they were. And we saw ARK, that fund ARK, emerging tech fund that taking a beating, and now he's saying it's going to broaden out and going to keep on going.
In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m. and I think this tech market, bull market's going to continue.
So he thinks it's the party, the punch bowl's going to be there for a long time yet, with alcohol in it, fueling this party that's going to go on for years yet.
How long does it take to get to 4 a.m. though?
I think in our opinion, it's a 2-year tech bull market because
2 years.
I think the next phase, the second, third, fourth derivatives, it's about the use cases playing out. Of course, you see what's happening with Microsoft, the hyperscalers, Google, Amazon, but then next, it's going to be names like Palantir, MongoDB. I think what McDermott's doing at ServiceNow. You look at Oracle. If someone told you Dell was an AI name 6 months ago, they'd say there's no way. Look at it today. And I think it's a 1995 moment, not a 1999 moment. I think numbers go up significantly going into next year, and it speaks to our view where the bears will continue to yell in their caves about valuation with their spreadsheets, but I think this tech market continues to move higher.
He's got away with words, doesn't he? So yes, definitely he mentioned software names there that haven't really caught a bid for a while. Some have, and Dell. So it's gone from hardware to software. I think that's the way he sees it. And the party, as he puts it, is just getting started.
You've been saying it's 95 for 2 years, Dan? How long does 1995 last?
So they're referring to 1995, and of course, if you're a bit younger, you may know something about the dot-com bubble. But really 1995 to 1999 really hit fever pitch. 1999 was crazy. I do remember it. I was definitely younger then. But March 2000, it finished. And so for him to say that, he says he must think that it's going to go into a bubble. Others have said, that it's already a bubble, Nvidia. But Dan Ives is saying it's going to go on for a long time. What do you think? Let me know what you think, if he's correct, if it's going to go on for quite some time. I know that a lot of people do think that there's a lot of optimism, bullishness. And also, if you're liking this video so far, do hit that like button to help the algorithm to spread it to more people. And do subscribe if you're new here to get more of this kind of content in the future. Okay, let's carry on with Dan Ives.
So I think, look, in 95, ultimately becomes 96, 97.
Of course, yeah.
But the difference here is that you talk about the capex of Meta, 50 billion, what we're seeing Microsoft, 100 billion. As someone that covered tech back in the late 90s, this is not a bubble. This is not a 99, here it comes moment, which is, I think now it's about really a fourth industrial revolution. It's about that multiplier. Now it's
fourth industrial revolution, ding. So he's really hitting all those high notes there. And, godfather of AI, he's very bullish. He's one of the most bullish people, and it's definitely feeding into that optimism. This is not financial advice from me. I'm just reacting to what he says, and I like to react to it because into these programs to see the bullishness, to see the sentiment that's going on here. And I have started this other channel, Stocks Today with JJ. You'll see there's Peter Thiel talking about Bitcoin and other Tom Lee there and others. It's fun to react to these and to see the sentiment of the market, and I try not to get affected by it. And it's not fun. This is in no way financial advice. You need to get your own financial advisor and do your own work. This is just for entertainment, and I think it is entertaining and general education. All right, let's go back to Dan Ives and see what else he's got to say here. I think he's pretty much said it all, that the party's just getting started. It's only 9 p.m. going to 4 a.m., whatever that means, or years yet.
Software, and I think when you look at consumer, that's why Apple, it's going to be the renaissance of growth that starts as AI-driven super cycle from Apple. And that Apple might...
We're going to have a look at Dan Ives' record, by the way, soon. After we've said this, we'll take a look at Dan Ives' a recent record as an analyst, because he got buy, sell, hold ratings and so forth, and what stocks. What's his record been? He talks big.
Microsoft, Nvidia on the enterprise side, that's where I think it's a get out popcorn moment, in our opinion, for tech stocks still, 15% higher.
And even when you're sometimes negative on names, you seem to still be positive on them. I think of Tesla, which, by the way, you were right to stay positive because the stocks come back.
Tesla came out with delivery numbers as I speak today, went up about 10%. They beat expectations, but again, their short-term expectations, deliveries are actually still down 5% year on year, but the market popped, and there's that, 8th of the 8th robo-taxi moment coming up, and everybody's bulled up about that as well.
Back. But, on the negative side, you do write the losers are going to be, in this revolution, will be the tech players that get squeezed out of sales cycles, technology-driven platforms, and future growth opportunities because they don't have the tools, tech, or software engineers to compete. So what does that mean, and who is that likely to be?
So you've seen some of the disasters, UiPath, and some of these smaller players that have been...
UiPath was one that Cathie Wood at ARK was heavily invested in, and it's done so badly. Ironically not going so well with AI, being hurt by AI when a lot of people thought that would be that would benefit from it. So these, winners and losers...
been squeezed out of sales cycles, what's happening across software. So I think what's going to happen is across software, across semis, it's not just saying AI 40 times in a conference call. Now, to Mike's point, now the next 6-9 months, it's about execution. I think strong gets stronger. I think a lot of the smaller players get squeezed out. Ultimately, I think that will be massive consolidation in terms of that phase for software. But I think any sort of hiccup that these companies, you'll see these stocks down 20, 30, 40%, which in our opinion is you focus on the themes, you focus on the winners, the Microsofts, the Apples, and then even go like mid-cap. I think in cybersecurity, and I talk about value, I think software and cybersecurity is where I see just massive value, names like CrowdStrike, Zscaler. Palo Alto continue to be that as a table pounder, even though.
So he's bullish on cybersecurity, and that is one of the stocks that he's done well. And over the past year or so, we'll have a look at that.
You know, many, including New York City cab driver, were bearish on Palo Alto 6 months ago. It speaks to what we're seeing with this cloud AI revolution.
All right, you're going to let us know when 99 2000 is coming, though, right?
But right now,
No, you won't be able to do that. You're too bullish.
So you're going to say it's 1995 for the next 2 years?
But the point is, it's 9 p.m. It is not midnight, and I think this thing goes to 4 a.m.
And this is a man who knows how to party. I mean,
Okay, so let's take a quick look here at, Dan Ives here. His success rating is 54% on stocks, so we can't actually see all that there. I'll just make that a bit lower. So 3.6% average return on, per rating. And this only goes back for 1 year. I haven't got the full breakdown here, but 3.6% average rating. Maybe he's had some good, better returns on, but 54% definitely above average. 1,700 out of nearly 9,000 there. Analyst 4-star. So analysts don't usually have a great rating, and as we know, fund managers 90% don't even beat the market. So it's just super great. And here we can see here that his main sector is technology, and the stock he's done the best in is Fortinet, where he has a buy rating on that still. You can't see that there, but he's had a 204% return there over the past year. This just be for the past year. So buy ratings, analysts tend to have just buy ratings these days. 77% buy, 21% hold, and 0.96 sell. So mostly buy ratings on stocks. They hardly ever say sell, even if it looks like there's a bear market coming along. And so, there's the full breakdown there. So he has mostly covers Apple, Tesla, and Microsoft, which he did talk about there. And he does talk about frequently on these programs. And if you want to see more about this, I do have the Art of Value Patreon here, where I talk about this kind of thing more. Definitely not, super bullish. I could on YouTube just be super bullish like Dan Ives, and that's what people want to hear, but I'm trying to be a lot more balanced. And on here, I do a weekly investing update on the Art of Value. It's very cheap, should be cheap per month, I think, good value. And stock analysis secret source, I've started on 2 lessons there. I'm going to do one every week. And with the weekly investing update, I say things there that I don't share anywhere else. So do join us over there if you want to. You'll see here, that's the Stocks Today with JJ. Do join us there if you want to. And thanks for joining me today. I'm going to put a link on screen that's on YouTube, if you're watching this on YouTube, to the video that YouTube thinks that you should watch next. So go and see that now if you want to, and do subscribe to get more of this kind of content in the future. Thanks for joining me today, and I'll see you in the next one.